Wouldn't it be great if you could buy a powerful stock after a pullback just as the downward momentum stops and the stock begins to move back up in your favor? Holy heck yes it would. Well, these aren't my words. Well, the holy heck yes was, but these are Scotland's. And if you're not familiar with this Irishman that trashes the market, you should be. After all, he's had multiple triple-digit year returns, and his highest being 302% in 1 year, and this year he's already up 150%, although I guess this year is about ready to close, but the point being, this man's a monster. Now, Scotland developed the indicator that uses a 4 EMA of the highs instead of the closing price. This is called the Slingshot. The idea is to find stocks powerful enough to break the short-term downward pressure, and when the selling pressure is done, the stock starts to run. At least that's the idea. But how do we trust this? We know that we have anecdotal evidence with the top trader hitting triple-digit returns, publicly sharing his often highly successful slingshot trades, but me, I thirst for more. If we haven't met yet, my name is Leo Smigel. I'm an algorithmic trader and have another channel where I analyze what works in the market using computer code. I discuss how to trade algorithmically and all sorts of fun stuff like artificial intelligence. And this channel is where I deliver the goods without all the nerdy stuff. So let's get back to that setup. I tested 3,186 trades starting on January 1st, 2020 until the date of this publishing, which is December 22nd. And let me tell you, it's good news. But before I interrupt this present early, let's talk about the characteristics of the slingshot setup. First, what's the universe? The universe is just a fancy term we algorithmic traders use for saying, what are our potential investment opportunities? In this case, it was the QQQ or NASDAQ constituents. So now that we've covered the universe, let's talk about the setup. And the setup, in essence, is quite simple to understand conceptually, right? Let's think about what we're trying to do. We're trying to find a strong stock that has a pullback, and we're hoping that that pullback is temporary, and we're looking for a low-risk entry to hopefully get in on the move of the continuation up and to the right. That's it. It's a pullback strategy. So let's talk about this a little bit more in depth so you can have a better understanding of what was tested, and then we're also going to look at some charts. So we say a strong stock if the stock is in the QQQ, which also means it's liquid, that is above the 50-day moving average on the daily, okay? And a pullback occurs in multiple ways, but for our case, for the back test, was if the close of the daily was below the 5-day EMA. Now, the next thing we have to think about is now we've identified a strong stock that's in a pullback, where do we enter? Well, the first thing we need to think about is risk. And whenever a stock pulls back, what do we want to see? We want to see a consolidation period, ideally, right? And the reason for that is twofold. It shows that buyers are coming in. And secondly, the action gets tighter, so you can set a tighter stop loss for better risk-reward dynamics. And basically, what we look for is a break of the 4 EMA of the highs on the hourly, and how I tested it. So when the close of the current bar is above the 4-hour EMA, the hourly EMA 4 period, hopefully that makes sense, it breaks above that, that's where you enter. And I put on the model the close at the low of the day. In fact, what I've noticed is that whether you're doing the slingshot on the daily or the hourly, both of them come up with the same roughly risk-reward dynamics. The issue is if you're doing it on the hourly, you get a lot more trades. So anyways, hopefully that makes sense. We'll dig more into some of the data after this, but the first thing I want to do is show you some charts so you can get a better understanding to see if we can make this a little more lucid. And we'll start with lucid. See what I did there? So here you'll see the daily chart on the left for lucid and then the hourly chart on the right. You'll also notice I have these yellow bars here. These yellow bars mean that this bar, the close of this bar, is higher than the 4-period EMA of the highs for that time period. So in other words, the 4-period daily high EMA versus that bar's close, right? So that's part of the entry signal for a slingshot. But remember, the slingshot just doesn't fire if it's a 4 EMA cross, right? And we're going to see some more examples of this. But basically, remember what we're trying to do. We're trying to find a stock that's in an uptrend, or that we want to enter in on, right? Typically from an uptrend that has a temporary pullback and then it's going to continue in the same direction. So we can see here that Lucid makes a pretty strong move, roughly a 76% move. It starts to consolidate. It comes down to the 50 EMA reclaims. That's obviously a signal in itself there, and then breaks out of this range on across of the 4 EMA highs and moves up and to the right. Now, we can see that obviously this was a profitable trade, but one thing I've noticed during backtesting is if you use the hourly, you can actually get in just a little bit earlier. So we can see here that we could have entered around 23.30, right? So 23.30 instead of waiting for the close of that bar just to get a little bit of a better entry. And not only is it just a better entry, it's a better risk reward because remember, we're putting our stop at the low of the day or the low of this bar here. And in this case, they are essentially the same thing. So this is also an opening range break. So not only does it qualify as a slingshot, it's also a breakout. So this is definitely a good trade to take. And we can see, you know, how it runs up and to the right. So that's a good example of a slingshot. We see some confluence, right? We see undercut and reclaim, and then on the 50-day, and then pushing up and to the right after a consolidation period, right? And some tightness here, so we get a little bit better risk reward. But now we're going to actually go to Scot1and's Twitter feed and see an example from the man, the myth, the legend himself. And we can see here Scot1and's charting platform. If you're not familiar with this look, this is TC2000. TC2000 is one of the best, if not the best, stock charting platforms out there. And the reason really is twofold. One, it has tremendous scanning capabilities. And two, you can do some cool stuff with some of the indicators. So you can see here that the blue, when it changes to blue, that shows that a slingshot, or not a slingshot, but a cross of the 4 EMAs occurred. So it can be a visual guide for you when trading that this, you know, slingshot could potentially have occurred. Well, and we'll see what are the other requirements here, right? So let's dig into the chart as I digress. First, this is not a slingshot. Why? Even though it's a cross of the EMA highs, we don't see any consolidation. You're just FOMOing in. That's it gives you a terrible risk-reward dynamic, so obviously not a slingshot. Same thing here, no real consolidation, right? Now when we start to see a pullback, it starts to get a little bit more interesting. Number 4, we don't see a blue highlight, so it didn't cross the 4 EMAs. Number 3, it does look like it was a range break, and when we talk about a range break, we're typically talking about a break of the recent highs. I mean, obviously, there's multiple ways to think of a range, and as you get a little more sophisticated, you should use volume profile for, you know, kind of range areas and breaks. But anyways, point is, it breaks above the high, so that's a range break. This is not a daily, apparently. Not a slingshot, just a range break would have been on the hourly. But I did notice during the back testing that the hourly slingshots were incredibly profitable whenever you were, you know, taking profits a little bit earlier. And you get a lot of opportunities. The challenges you just have to, you know, take. I mean, it's just managing all of this potential slingshot opportunities. But again, I'm digressing. We'll talk a little bit more about the results in a minute. Number 4, not a slingshot, right? There's no real range break to the upside. And number 5, excellent slingshot. As you can see, and this was not planned, we see an undercut and reclaim of the key moving averages. You know, that's obviously something you'll see in Qualamagi's techniques frequently too, but basically, you know, that you just have to think of the rationale behind it. Obviously, lots of algos and traders are looking at these things, right? And a lot of the execution for buying from big institutions is algorithmic too. So they see it comes back in a pullback. Well, now we can potentially buy. So we see the undercut and reclaim, stating that there's some, you know, potential interest here, and then range break out of this thing and to the right. So that's a fantastic slingshot, again, with the confluence of factors, and we see how that turned out pretty well. It's finally time to look at the backtest data. We'll focus on the slingshot data for the hourly time frame, but I'll speak on the daily slingshot when I summarize the findings. We'll start off by looking at the edge, and we'll follow that up with a number of potential opportunities to exploit that edge. With this in mind, we need to cover what exactly I mean when I say edge. Let's think about it this way. If we flip a fair coin, the chance of it landing on heads or tails is 50%, assuming there's no remote possibility of it landing on its side due to a sticky floor or something crazy. If we get $1 when it lands on heads, but lose $1 if it lands on tails, we have no edge because the expectancy is 0. However, if we get $2 if it lands on heads, and we lose $1 if it lands on tails, now there's a positive expectancy, and you can bet I'm flipping that coin all day long. We can see here that there's definitely an edge when looking at the hourly slingshot, and what's interesting is that it does appear to get you into some big winners early. So what's the challenge? Well, there's an inverse relationship to the risk reward to the number of trades, and being able to spot all of the trades unless you're trading algorithmically is near impossible. But what about the daily? Well, the daily results were just as good, and in some cases were even better, but there's less trading opportunities. For the sake of this video, I'm not going to exhaust all those results here. However, if you're interested, let me know in the comments and I'll add the data to the associated blog post. But basically, the story is the same. The Slingshot is a good setup. Am I surprised? Not really. When you have a consistent triple-digit trader, the setups that they're using must be pretty good, right? So hopefully this information excites you and maybe you'll have a new setup to potentially add to your repertoire. So what are the next steps? Well, I think the answer is obvious. You should stop thinking immediately, follow Scotland on Twitter, and copy everything he does and retire in a few years. Just kidding. Well, minus the following Scotland on Twitter. That's definitely something you should do. But the real answer isn't to stop thinking, it's to start thinking. Start thinking deeply about what moves the market, and if you believe in a certain setup, then study it. Develop an intuition around it and understand why stocks move the way they do. In fact, I'm a big believer that once you really study market dynamics and understand your setups deeply, that a lot of the mental challenges that we have as traders, FOMO and things like that, actually just basically evaporate. And this even applies to algorithmic traders. So if you study your setup, study the way markets move, and do a deep dive, maybe one day you'll become a market master with multiple triple-digit years under your belt. And if that's your goal, here's my plug. To find out what really works in the market, backed by hard data, please like and subscribe. And I'd also want to say one more thing. Hey, Scotland, thank you so much for taking time out of your trading days to give me the answers I need to get to create this video. You're awesome. Keep up the great work. Thanks, everyone. Bye-bye.